The
Ponzi
Ponzi
podcast.
podcast.
The thing that we learned, I guess, from the last one was, or from just what we did, was that we kind of pre-discussed the topic a couple of days ago, and we talked on the phone for an hour, and we kind of said, like, man, we should have recorded this because it was more
Yeah.
natural.
Yeah.
So we hope, yeah, that we can kind of wrap through the whole thing. But let's maybe go through why we wanted to talk about this, right? I think it came from because in the last episode that we did on value of a token, we kind of briefly touched upon it, but we didn't go into it, right?
Mm-hmm. Mm-hmm.
And then we sort of had the idea that we should talk about this because this was an interesting topic, right? Maybe you can tell us about the Doomberg piece just a little bit.
Yeah. I think in essence, everyone should go and read that article because it's a good one, and we're huge fans of Doomberg. But I think in essence, if we were to boil it down, he says, or they say, with cryptos, you've got this pipe in and pipe out into the crypto space, um, and unless the money coming in is always more than the money going out, um, in a way, it's a Ponzi, right? Like the value of it is only because there's always more money coming in than money going out, and therefore it's a Ponzi. I don't know. I mean, that's a super simplistic way and high level way of explaining it. So everyone, just please go read the article. I don't know if there's anything else in that article, Flo, you thought of maybe that we need to share.
Yeah, I guess like the main thing was really in the piece they sort of, and I'll link it in the show notes. So they kind of said when they got introduced to Bitcoin very, very early on,
Mm,
um,
mm,
they were sort of skeptical of like if these returns that were promised or that were sort of that you've seen that they were sustainable, and that in order for that to happen, they that's what you said, right? They drew these two circles. They said, like, we've got the real economy, fiat, and then we've got the crypto universe, is what they called it. And then between these two, they drew these two pipes, like you said, right? And the one is like incoming money,
mm,
investors putting their money in, and then the outgoing would be investors taking their money out. And
mhm.
they said that since they don't think Bitcoin produces anything, um, it, it, it like the inflow pipe, like the amount of money that needs to flow into the system to secure the returns, would have to be larger than what can be taken out. And I don't necessarily agree on that assessment. And I've drawn up some charts, and maybe we can look at them later. But like, yeah, I think the idea of a Ponzi scheme comes from this or from multiple people, right? There was this guy, and he promised returns a lot higher than what was usual, and he, yeah, basically was just an investment thing, right? So he got investors to invest into this thing, and he paid the first investors um, the high fee that he promised, and he then, but the system was then reliant upon finding new people to put in their money, right? So that the first could be paid out. But what you could already see with this scheme was that only the first few got paid out because over time you weren't able to pay out all these other people. I think it's like
So
somewhat, yeah,
basically, he was paying. Let's say 10 people joined. He gives them a payout, right? He gives them some form of returns, telling them it's an investment, right? Investment returns. Then these guys go out, tell 100 other people, "Hey, I just made 20% in 2 months. This guy's a gun. He's the best investment analyst, whatever trader ever." So these 100 people then put in money, but instead of him really using investments to pay people out, he then takes whatever money's coming in and pays them. And there's actually a moral corruption there because he's lying, right? He's telling people that
yeah,
you're getting paid via investment returns. But what he's doing is actually paying people from other people's seed funding, right? Like
yeah,
other people's seed investments.
yeah,
So I think it's important to highlight that aspect as well. Like just because money going out might be more or less, the question is also where is that money coming from, right? Like, is it coming from the next person that's buying in, or is it coming from some form of value that's being generated in a system, right? Because it's not a
Yeah,
Ponzi
yeah,
scheme. If, let's say, he was really good in investing and he was able to keep paying people more than what they, and more people started coming in, and he got, let's say one day he has 10,000 people joining up, doesn't mean he's a Ponzi, right? It's
yeah.
only a Ponzi if he's lying about how he's paying that money back, right?
Exactly. Yeah, yeah. If you can rake in the returns of 20% a year, who knows? Then, yeah, that might be totally legit, right? Because he's just a very smart investor.
Yeah.
And like Warren Buffett is not a Ponzi scheme, right? He's kind of managed to return high rates over a long period of time, and so have done others. And yeah, so the Ponzi scheme is really more like this fraudulent thing. But then there's also the pyramid scheme, and I sometimes struggle a little bit to distinguish them, maybe because I'm not an economist. But I think the other one is like that you have this more like a self-fulfilling system, right? So you have the first joiners and you turn them into marketers because they've received the returns, right? And then for them to receive returns, they're going to go and recruit more people to join this whole system, right? And then, yeah, you have this exponential growth that you require to sustain the growth, but it's kind of based on the same mechanism that the system itself doesn't gain in value, right? It doesn't increase in value that much, or its intrinsic value, I guess. Yeah.
Maybe a pyramid scheme is, in essence, just a more honest Ponzi scheme.
Yeah.
Right? They basically tell everyone, hey, you need to buy XYZ product so that
Yeah.
you're now staked, and you can then tell your friends to sell XYZ product, and whenever they sell it, you get paid.
Yeah. 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 And I think, I mean, that would probably be more related to some crypto or token projects that maybe have done this in a similar way. I don't know. There's definitely some out there that are fraudulent and they're only based on new people coming in and buying off the tokens. But I think the really critical and important part is to look at value, right? And I think that's how we came to this whole idea, because the last recording or session podcast that we did was about value. We really looked into what's kind of the value that we create and how can a token help to capture that value, right?
Mm-hmm.
And if something creates value or has intrinsic value, then and if you don't promise returns that you can't make, then I don't think it is a Ponzi scheme.
Yeah, and it was very important for us to touch on this point and to go deep into this aspect of tokens and crypto assets, right? Because we're pretty excited about tokens, obviously. But at the same time, it's important for us to say, hey, how do we know that we're walking into an arena that has moral integrity, and it's not something that it's just a get rich quick scheme, where the early adopters get rich off the latecomers. So that's why we decided, I think, to really dig a little bit deeper into this topic for this space, right?
Yeah, yeah, and look into it. And we had this one example, and I really liked that one because we both love watches, and we kind of talked about Seiko. Look, he's wearing a Seiko. I'm wearing this Seiko movement, but it's not a Seiko watch, but it's a Singaporean watch. And it's done well. It hasn't rusted after lots of surf sessions. So we kind of compared, Rolex. And my personal experience with this, if you would try to buy a Rolex, it's impossible to get a Submariner currently. Just walking into a shop, you just can't get it. People buy it immediately, and they know that they can kind of resell it for higher once they've just bought it at the shop, right? And that's this crazy thing. People think it's a really good investment, and it might be, but if you think of it from the perspective of maybe intrinsic value, and intrinsic value for a watch could be just like the materials it's made of, the movement. like how accurate can it keep time, and maybe some special features like I don't know, a GMT, a second GMT hand, so you can have 2-hour hands and use different time zones or something like that, right? But Seiko, who also produce really good watches, they might have a similar watch with very similar features, similar materials, and all that kind of stuff, but still, they don't sell nearly as high as Rolex watches. And I think that's a Ponzi to some degree, right? It's not, and we also talked about like this Ponzi scale, right? I think there's like this, it's not always like a full Ponzi, but it's like partially. Of course, Rolex has intrinsic value, but the surplus on top, or the amount on top that it trades, that's something that's just purely speculation, because you think somebody else is going to value it more than what you valued it at, right? Or what you bought it at.
Yeah.
It doesn't produce any value, right?
What we're saying, well, we said something during the call, right, about how to differentiate between price and value. Because, like there are some very famous quotes from people like Buffett who says stuff like, hey, price is what you pay, value is what you get. But when we were talking about it, we said, hey, if you could not sell something that you've bought, or something like that, right? Wasn't it? If you buy something that can never be sold again, how much would you pay for it?
Yeah.
And that might be a closer representation of its value, right? Whereas everyone that buys a Rolex, everyone that buys that Rolex, they're willing to stand in a line, get on the waiting list for 5 years just to buy something, knowing that they can probably sell it off to somebody else for more money.
Yeah.
If they were told, hey, whatever Submariners you buy, you're only ever going to be able to sell it for maximum what you paid, I'm not sure if it would have that much fanatics chasing after it, right?
Yeah. And I think that
I was visiting Leipzig, and I just want to share this crazy. We went into this dealer, right? Because a friend of mine in Singapore said, hey, they would really like to buy a Rolex for their son, who's like now 4 years old, and they'd like to give it to him when he's graduated, right? So I went into this authorized dealer in the city center in Leipzig in Germany, and this is a small city. People there are not really into luxury stuff, right? And I'm standing there, and there's a queue to get in. There's no queues anywhere else, right? But there's a queue to get into this place. And I'm standing there, and then I finally, after about an hour, I get to talk to someone, and he says, "Oh yeah, we have a lot of Rolexes on display, but we basically have no Rolexes for sale." So if you want to, you can get on our waiting list. And if you build up a reputation with us, like if you buy the less popular watches, maybe one day you'll get the more popular watches, right?
Yeah.
And so I was asking him, like, okay, so for a Submariner, for GMT, for Explorer, these watches, how long's the waiting list? He's like, oh, in 15 years, maybe you will get one.
Yeah. I think they have a problem with scarcity, right?
Or maybe it's put there on purpose, right? This scarcity drives everybody into a frenzy.
Yeah.
Everyone's thinking, oh man, this is so scarce, it's so hard to get. I want one at any price, right?
Yeah. And this kind of, I'd like to, when you just said that, I thought of like these Bored Apes or the CryptoPunks, these NFTs. I think sometime mid last year or so they came out, and there was just this insane hype, right? Because they said we're going to only have 10,000 of these profile pictures, and they're basically like pixel 24 by 24 pixel versions of some comic punk, and there's 10,000 of them, and then they all have different features, and some have more rare features, I guess, more scarce features. And people went crazy for these scarce features, right? They just said like, we're gonna pay I don't know what the highest was, but I think probably was over 5 million US dollars to pay for these things, just because they're scarce, right? And I think
Yeah.
the whole Rolex thing is something very similar.
Yeah.
Sure, it has an
So
intrinsic
again,
value. I'm not gonna doubt that, but yeah,
what the CryptoPunk 24, it's
maybe
huge
it
intrinsic
has.
value.
Maybe it has. I don't know. I mean, it's a piece of art.
Yeah.
So like, and piece of art, like, I don't. It's up to your own judgment if you like that. So yeah,
Subjective.
very
Yeah.
subjective. I can't really tell. I'm not into art.
But it would be interesting if we were to say, hey, this stuff is frozen, you can't sell it anymore. What is it worth, right?
Yeah, yeah. And I think then you would value stuff at the intrinsic value, right? You would look at, okay, what is this really worth to myself, right? If you had this CryptoPunk, and you'd have to evaluate, what is it really worth to me to display this as my profile picture, and to display this as maybe printed out, hanging on my wall, or to not even that, right? Because you could technically use it as your profile picture because it's just a JPEG you can copy. You could even print it out and hang it on your wall. You could do that too. So the thing that people actually paid for purely is the claim of ownership, right? So they can say like, I own this thing, and it's written down on the Ethereum blockchain, right?
Mm,
That's the only reason why. So, and
mm,
that would then, you would have to think about the intrinsic value of that, I guess, to find out, right?
mhm,
Um,
mhm.
yeah, but I'd like to really think about it in this way of, um, yeah, I don't know. I'm still thinking through this concept in my mind, like this, scale, or the spectrum of, uh, a lot of Ponzi,
Ponziness.
and yeah, Ponziness, the Ponziness spectrum, like that. Yeah, like what's on the, like obviously the initial Ponzi scheme or the pyramid scheme, where there's really nothing behind that promise you get 20% returns, if you just put in your money, that's like max Ponziness. But like on the more lower side might be something like, CryptoPunks or Rolex watches, um, might be somewhere on that scale, I guess, right?
Yeah. And I get maybe it would be easier for us to visualize it if we say, okay, what isn't a Ponzi, right? Like
Yeah,
me, Flo and I said, hey, yeah, we would pay the $300-400 to get a good Seiko watch that we would wear forever and maybe never sell it, right?
yeah,
Because it gives us that value. And so
yeah,
we pay that $400 knowing full well that we might never be able to sell this because it's not as liquid or it's not as wanted or there's not a mature marketplace for it.
yeah,
Um, so I think another way of looking at it would be, say you were to buy an equity, right? And this equity paid you dividends, right? And if you were to say, what was it the best the time horizon to own something that again we're quoting Buffett because Buffett's this legendary Buffett and Munger, right? They're these legendary value investors. So they say the best time horizon, the ideal time horizon to hold something is forever,
yeah,
right? And so for them, it's more like you buy something and you hope that you never need to sell it, and the value that this thing creates every month, year, decade, it pays you out in something, right? So in this case, you would say if you look at the amount of money that went into Berkshire Hathaway over the years and the amount coming out of it, I would say, I'm assuming, I don't know, I haven't run the numbers, but I would say more money's come in than it's come out, right? Like from people buying it versus people selling it. I would assume. And if that's the case, but then going back to that Doomberg piece, you would say, hey, Berkshire Hathaway's got a bigger pipe going in than coming out. But it's not viewed as a Ponzi because they own companies like Coca-Cola and railroads and airlines, which create value while time passes.
well, yeah, I get that piece. And if they pay dividends, I also get that, right? Because then you don't have to sell it. You just get paid every month or every year, paid these dividends, right? But if they don't pay
Yeah.
dividends, like let's say Amazon, I don't think they pay, dividends. And, so you could hold their shares and they would increase in price because
Mm-hmm.
there's different opinions on the market of people like who think I think Amazon's intrinsic value is worth more than it is currently priced at. So I'm going to buy it.
Mm-hmm.
And another person
Mm-hmm.
might think the exact opposite. He's saying like, I think it's overpriced. I'll sell it. And
Yeah.
that's how you can then make money with Amazon shares. But if you just hold them indefinitely, you're not going to make any money.
Yeah.
You just have a claim of ownership. But if Amazon doesn't get disassembled, or I don't know how to call that, they yeah, I don't think somebody could make any money with that then. So you have to sell it at some point.
Yeah. Yeah. You have to sell it. But then again, talking about it that way, you're right? You're selling something that is let's say widely accepted to be valuable, right? Because Amazon's liquidity and
Yeah.
trading volume on a daily basis is massive.
Yeah.
And when you sell it, you're going to put that value into something else again, right? And so in this case, maybe Amazon's giving you this, um, it has value because it has a business and a system that backs it, right? That backs the price of the equities. And if you were to say tomorrow Jeff Bezos is no longer there, um, there are other competitors coming that might give Amazon a run for its money. You would say, oh, okay, that competitive advantage to provide that value every single day it might be losing it, right? And then the share price would drop. So the share price is this call again, or this marker for what the market on a whole believes this equity's underlying value to be, right? Including what it might do going forward, right? There's
Yeah.
also that expectation
Future.
going
Yeah.
forward that this company will become more valuable.
Yeah. Yeah. And I
Um,
mean, yeah. And we talked about this
so,
with tokens of a DAO as well, right? If you think this thing, because you bring this community together, and the tokenomics DAO might be able to do that. We bring this community together, and just like bringing them together, all these smart people, we might create something great in the future, and that might be worth holding or buying the token because it's kind of this call option. You don't know if it's going to happen, but you're going to buy some tokens if it does, because then you might be able to profit from it in whatever way. Like
yeah.
you might sell it based on the intrinsic value, or you might keep holding it because I don't know, we might pay a dividend, or we might burn tokens and increase, uh, uh, reduce the supply.
Or maybe it gives you the ability to govern where this system goes, right?
That too,
To
yeah,
play a part in giving something direction.
yeah,
So I guess it's simply you can learn a lot by understanding the intention someone has when they put money when they part with their money in to exchange it for something, right? When you buy a car, you want let's say a 5-year-old Toyota Corolla. You're buying it for the value it gives you. You need it to get from point A to point B. So just the same with tokens. When somebody buys something, they stake something, are they wanting to add to the community via, you know, doing work for the community? Or are they buying something purely to say, nope, because I'm buying this because I think I'm going to 10x in 5 years or
yeah,
2 years or
yeah,
5 months, right?
yeah.
And I think that intention is important. And maybe it is true that a lot of initial movers into the crypto space have been driven by this speculative fever, right?
I think so. Yeah, yeah,
But it's important for us to differentiate between this speculative fervor versus people that are really coming into the space saying, hey, I love decentralization. Hey, I hate authoritarianism. Hey, I love efficiency. I love
future of work.
flexibility,
Yeah,
you know? And in that case, it's not for the speculation that you're gonna get rich off doing something. It's more like, hey, this is the life that I want to lead. I like the lifestyle that this affords me, and
yeah. The knowledge
yeah,
it
I love
brings.
the
Yeah,
community.
like the
Yeah.
community, the lifestyle, maybe, you know. We were talking about this, like, um, I work in tech, so for me it's kind of normal, but um, I love just working from home. You know, I don't like going to the office. I hate commutes. I
Mm.
love living here where I live, and being able to, you know, go for a swim in the afternoon with my daughter if I want to, and
Yeah.
not having to come back from the office and all that kind of stuff and spend or waste time on the commute. And I feel like, and then what I also do, you know, I've lived in a couple of different countries, and um, I'd love to just do that. If I want to go somewhere for a couple of months and live there, I'd love to just keep on working in a different time zone.
Mm.
Like, I want time zone to be the only limitation. I think, like, this is something that to me gives this whole thing a lot of intrinsic value, right? So
Mm.
aside from the speculation, yeah. But yeah, I guess this again ties into Rolex, right? I bet there's people who buy Rolex just for intrinsic value, and always have been, right? Because they're good watches, I think, and
Yeah.
they're waterproof, and you know, they hold the time very well, and they're very durable over time. And then there's other people who buy them for intrinsic value, but also for speculation. So if somebody pays them double the amount they paid for it, they would sell it, and others might not,
Yeah.
because they say, like, I love this watch.
Yeah. I mean, I'm not trying to dunk on Rolex, right? I actually quite like the brand. And, you know, if
I'd
say
love to buy one.
I,
Yeah.
yeah, like my dad wore one I think he bought himself and my mom one when they got married. And, you know, he left it to us and it has value, you know. And if say
Certainly, yeah.
I was stuck on a border, war-torn country and needed to get across, right? To get family across, whatever. It also has a value to be able to wear 10, $15,000 worth. And almost, now it's getting more and more conspicuous, right? But in the past, you'd be able to, it looks like a normal stainless steel sports watch, right? And you'd
Yeah.
be able to land in any country and go to any pawn shop and get, you know, enough money to help you survive, right, for the next 2, 3 months. So
Yeah.
it
And it
has its
and
value. Don't
yeah,
get me
yeah.
wrong. We're just trying to define now when people say something is a Ponzi, how and what makes something a Ponzi, and when we're in the sphere of tokens and cryptos, yeah, how do we go in with our eyes wide open, knowing what we're getting ourselves into, right?
Yeah. Yeah. I've done the charts. Maybe we want to have a look at them.
Yeah.
Because I love charts. And
Oh, really?
yeah,
Couldn't tell.
who would have thought? Um, so look, I've done this, and I really like to get a validation because I've got no idea. And Doomberg,
Hmm.
unfortunately, hasn't drawn this himself. So I did it. I thought, like, okay, well, I'll do two bubbles, right? I've got
The
investors on the
text is a
one side.
little small flow. So
Oh, maybe
is
I'll
that
zoom in.
fiat
Yeah.
inflow, fiat
Yeah.
outflow? Yeah,
Is that
nice.
better?
Okay. Yeah, super.
Okay. I'll try to, yeah. So you don't have to watch the video version of this. I'll try to walk through it. So we have one circle on the left that says investors. We have a circle on the right that says a pyramid scheme. So just for me to kind of visualize how it works, right? And for a pyramid scheme, you have a pipe going into the scheme from the investors or from the real economy, and that says fiat inflow. And you have another one that says fiat outflow going out of the pyramid scheme back to the investors. And what I did here, I drew the line going in a lot thicker because that's what we defined,
Hmm.
right? So what the pyramid
Yeah.
scheme does, it promises a 20% return a year. It might only have a 5% actual return and no intrinsic values. So for investors to make money, there needs to be a source of new money coming into the system to pay out the ones that want to go out. And that's how it can collapse, right? Because if there's not enough new people bringing new cash, then the whole thing falls apart because you can't sustain the 20% returns, right, that you promised. So
Yeah.
that's kind of how I see that. And then I've done a few of these. So I've done Amazon, and we talked about that, right? So here again, I did the bubble with
Hmm.
investors. I did the bubble with Amazon. But here for Amazon, I said, well, investors, they own a part of the intrinsic value, right? That's what shares do, right? You own a part of
Mm-hmm.
that company, and you can buy and sell these shares on a market based on what you think about what the intrinsic value is, right? So that's like there's no fixed incentive. There's no fixed intrinsic value written down anywhere. You have to calculate that for yourself based on. There's multiple ways to do that. Value investors will know how to do it, right? You can like discount future cash flows. There's other ways. I'm not an expert in this, but everybody
Like
would
PE
come up with the different numbers.
ratios.
Yeah, something like
Yeah.
that.
Yeah.
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 And so you would value it. And if you think, oh, currently I think it's overvalued, if it's overvalued, maybe you could just look at the PE, yeah, the price to earnings ratio. And if that's too high, you could think, I'm selling it. But somebody else might say, I really believe in what they're going to do in the future, and therefore the price will rise. So I'm going to buy in. I'm going to buy these shares. And then Amazon on the other side, they have intrinsic value, right? The company, because they produce stuff. It's not like the Ponzi scheme where somebody's just like pretending they're doing something they're not. Amazon is producing stuff. They're shipping goods. They've got AWS, like the whole cloud thing, but they also don't pay a dividend, right? And that's an interesting aspect that we talked about earlier. So you as an investor, the only way to profit from buying Amazon would be you have to sell it, right? Because otherwise you're not going to get anything from them. You would expect their intrinsic value to increase over time. And then when it does, somebody else will be willing to pay more for it than what you bought it for. And that's how you profit. I don't think there's another way, but that's kind of how I see it, right?
There might be another way where people are starting to leverage ownership of these things and they're able to maybe even borrow against their holdings of these shares, which then allows them to get working capital to use, right? That's something else. So it's basically viewed as a piece of collateral, you know. I mean,
Yeah.
it's often the case when you have a brokerage account that you can buy more than the amount of cash you have in there because
Yeah.
just because they believe that whatever you have bought already, you
Yeah.
can leverage that, right?
Because they could
So
sell
that's
it,
one
right?
other thing. Yeah, that's
I mean,
one
that's how a
other
lot of,
aspect to think
yeah,
about.
borrowing, a lot of borrowing lending protocols in DeFi work that way, right? You have to post a collateral, over
Hmm.
collateralized usually. And then
Hmm.
if your position moves against you, the broker or the protocol will sell off, liquidate your positions in order to ensure that they don't make any loss, right? But they'll give
Hmm.
you, if everything goes fine, they'll give you a certain, or they'll borrow a certain amount to you.
Hmm. Hey, something interesting happened over the week, last week, I think. Um, there was this news headline saying that Russia asked China for assistance with the war that they're having in Ukraine, right? And America and the Western countries said, hey, if China does actually take part in the conflict, they will come under sanctions as well, right?
Mhm.
So there was this fear in the air that um, Chinese companies, Chinese entities would be placed on a sanctions list, right? And instantly, right, the Hang Seng index dropped, right, dropped tremendously. Companies like Alibaba, I mean, I can pull it up, but
Yeah.
they crashed. They absolutely crashed. And so that's one thing to also think about, right? The reason they crashed was not because Alibaba's business is mainly on the mainland. So whether
Yeah.
they get sanctioned or not, the value they create should not get impacted that greatly, right? But for the stock to still move in that way, the price of the stock to still move in that way, it means people were selling that portion of the value um, where they believed they could actually sell it onwards for more, or that it provided liquidity or whatever. So the prospect
Yeah.
of that liquidity getting frozen made a lot of people decide to dump their ownership in the stock, right?
Yeah.
So
Because they
that
probably
I just
think
thought that
short
was
term. Yeah.
interesting. Yeah, So
Yeah.
it wasn't about the intrinsic value in that case. It was about the ability to sell the trade, the entity going forward in the short term
Yeah.
was pressuring them to let it go.
Yeah. I mean, you can think about this in the same way with like Russian stocks, right? The Russian stock exchange is not open, but you can kind of see what a lot of the companies that are in Russia would trade at, right? And I don't think because of the war, Gazprom is like getting less or gas out of the ground, right? Or Lukoil is getting less
Yeah,
oil, or the miners are getting less, digging less stuff out of the ground. So their
yeah,
intrinsic value actually hasn't really changed, but with all the uncertainty, I guess the price changes, right?
yeah. So some might even argue their intrinsic value has gone up because the stuff that they're mining or they're
It's more
producing or
expensive. Yeah.
extracting has gone up in price, right?
Yeah.
Um, so maybe there's that aspect of intrinsic value and perceived value, right? Because
Yeah.
everyone's, value
Yeah,
is
of
very
course.
difficult to
Yeah. Yeah.
define.
Yeah. That's what I say. Like everybody has a different perspective on the value, right? It's like
Hmm.
I might have a more long-term view than you. So I'll
Hmm.
say like, I'll sit this out. I'll hold my Gazprom shares because in 5 years' time, I think it'll be all forgotten and they'll be back up there because they'll still produce gas. And you say
Hmm.
like, oh, I can't stomach this for 5 years. I only have like 2 months and my asset allocation is too much on this part. So I can't hold it. I need to sell it. Right.
Or somebody might say, hey, you shouldn't own that because it's supporting the Putin regime, you know? So
Yeah.
there's all these aspects
Oh
that are
yeah. Yeah.
so asymmetrical, right? But it affects people's buying decisions, and people's buying decisions affects price,
Yeah.
right?
Yeah. Yeah. I mean, that's a whole nother talk, I guess, on like psychology of price and how price fluctuates, right? But what I'm
Hmm.
thinking about is like really value. I don't think fluctuates that much.
No, no.
And
Yeah.
so, yeah, cool. I've done the one on Rolex watches. We've talked about this a lot. I guess we can skip it. I think to some degree it's a Ponzi scheme. Like everything
Yeah.
that goes beyond the intrinsic value, Rolex watches, yeah, there's a lot of speculation in it.
We've lost half our listeners.
All the
So
Rolex fans. Like
all the
I'd really
Rolex
like
fans
a
here.
Rolex watch. If I could get a Submariner, I'd probably save the money and get one. But I can't.
Yeah.
It's impossible because I don't want to
Yeah.
buy Datejusts.
Call
Just to
me in 15 years. I might have one for you. Twice the price of
twice the
retail. No
price. Yeah.
worries.
Yeah. Yeah. You can buy it like on secondary markets. Certainly you can get one there, but it's just like a lot more expensive.
Hmm.
And yeah, I'm more of a utility person, so I really like that. So
So Bitcoin, gold, the big ones.
Bitcoin, I put them together in one because I think they're very similar. And I've just read this like brilliant article from Lynn Alden. I'll link it. It's just so good on like she goes into what is money, and it's like super long. It takes an awful lot of time to read, but I got lots of value from it.
It's
And
worth the time, right?
it's worth the time, totally. Yeah.
Hmm.
And she like explains it. I mean, she has a lot of articles that I don't understand that well because I'm not too much into the topics, but this one she does that very well. So I highly recommend
Hmm.
that one. And so she talks about like if you talk about what is money, of course she mentions Bitcoin and gold. And to me, again, it's the same, right? Gold has some intrinsic value. Like worst case, you could just use it for jewelry. There's some industrial applications for it, but it's not a lot. But in general, I think what it does through its scarcity, it
Hmm.
it allows people to trade and
Hmm.
use it as a store of value and transact with, right? And I think the main reason for that, and that's what she argues as well, is the scarcity, because it's just scarce. And the cool thing is, like what she describes is this very interesting scheme. She says like usually our goods, most of our other commodities that we get, like wheat, we've gotten so much better in like producing them, right? Like, think about it. 200 years ago, a farmer had to, with an ox-driven plow, we had to kind of manage the field, and now we have huge tractors and machineries that just do that, and the efficiency has just increased so much. But for gold, it really hasn't. And even though it has to some degree, of course, gold mines have become more efficient, but we've digging out most of the stuff that is easy to reach on the earth, right? So the remaining gold that's out there might be like somewhere the oceans are really deep underground, or in terrain where you can't really get to it. So through that, gold is still scarce, even though technology has gotten so much better.
Yep.
And
And I think that scarcity is tied to the energy component, right? Like how much
yeah,
energy, human and kilojoules of diesel is needed to extract and produce either that one Bitcoin or that 1 ounce of gold, right?
yeah,
That makes it scarce. It's
yeah,
there. You can go and find it. You can go and dig it up. It costs a lot in time and energy,
yeah.
and that
Takes
gives
so much
it
energy. Yeah,
that scarcity slash intrinsic value
yeah,
that
yeah,
people can
exactly. Yeah,
trust. In a way, it's like a trustless system, right? People
yeah,
know this gold was scarce because everyone knows it's not easy to just grow a tree and go pick kilo bars off it, right? It doesn't
yeah,
work that way.
yeah, yeah, exactly. You can't easily produce more of it. And then I guess there's also a belief aspect in it. Like, people have to believe that it's worth something. Otherwise, I wouldn't accept a gold
Hmm.
bar um, as payment. But the fact that the matter that it is for, or it has been for the last, I don't know, 5,000 years, um, gives it this like utility, right? Because you can use it to trade. I mean,
Yeah.
it's not really a perfect medium to do that, and that's why they put like the whole paper money, fiat money on top of it, because it's much easier and more divisible than gold. But still, you could, worst case, use it to trade for something, right?
And the
Um,
super interesting thing about these products, these entities, not entities, gold, Bitcoin, right? These means of exchange, their underlying value actually goes up whenever there's an increase in distrust to whatever fiat system is in play, right?
yeah,
So, if you're in Weimar, Germany, or you're in Shanghai in the 1940s when there's a civil war going on,
yeah,
suddenly, right, your ounce of gold becomes so much more valuable just because all that all that value that a marketplace needs for this item to be used as a trading medium, it gets concentrated into this amount of gold, right? Normally
yeah,
that's spread out to all the different bank accounts, fiat accounts that everyone has and that everyone's using. The moment people lose trust in those things, what happens? Everyone goes back to this trusted system that's neutral,
yeah,
right?
yeah, exactly.
And
Yeah,
and and you can even maybe, if you go to Venezuela and you've got a briefcase full of US dollars, or even if you just had $100, you'll realize, this $100 note buys me so much more in Venezuela than it does back home.
yeah,
And
yeah,
because it's probably because, a stable means of exchange in Venezuela is very, very rare, and therefore
yeah.
it's scarce, and it's more scarce than it is in Miami. So that's why it's worth more,
Has more value. Yeah, yeah,
Yeah.
that's true. Yeah, and I guess like there's also more belief in it, I think.
It's
And
trustless, right? In a
yeah,
case. Are you
yeah,
talking about the US dollar or gold
yeah,
now?
US dollar. Yeah, I'm talking about like this. If you look at it at a spectrum again,
Yeah.
um, there's more belief in the US dollar than there is in the Venezuelan peso or whatever they have. Um,
The Bolivar.
the Bolivar. Sorry, yeah,
Yeah.
Bolivar. You're right. And then there's gold on the belief system, which is on the far other end of that, right?
Yeah. And for such a long time, most market participants have poo-pooed gold right? Because they're like, why would you care about gold? You've got the US dollar and it's such a good
Yeah.
system. It's so much more frictionless, etc., right? 2008 happens and bang, trust gets lost, quantitative easing starts, and then you see gold starting a bull run, you see things like Bitcoin getting created, suddenly people start questioning, hey, what's money? Is it
Yeah.
currency or is it money? Or okay, if it's money and it's
Yeah.
valuable, where did these guys just suddenly get all that money to bail everyone out? Where did that money come from?
Yeah. 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 And that's something that like makes it super valuable. Like both of them, I think. Because it's scarce. You just can't print more of it. And
And I think, yeah,
yeah.
during COVID, everyone got locked down, right? Everyone got scared. Everyone's looking at their screens and they see, oh, we're going to have a massive deficit this year, but no worries. We'll print the money needed to keep people in a good shape, right? And we'll give
Yeah.
out these
Keep them happy. Yeah.
checks. Yeah, we'll print these steamy checks and send it out through the mail. And I think that made a large proportion of the population think about money a lot more. They're like, hey, nobody's working, so where's the money coming from? And
Yeah. Yeah. Yeah.
if I just get $2,000 in my post box, what does that mean, right? And maybe
Yeah.
that could also be part of the reason as to why so many stock markets around the world started rallying like crazy, because maybe people thought, hey, I might as well put my money in something real rather than something fake, right? Like if I own something, if I own a piece of Tesla, I guess it's better than owning a few digits in my bank account that the government can then double again at a
Yeah.
stroke of
Yeah.
a pen, right?
Yeah. Exactly. Yeah. Yeah. But so then in that case, if we look back at the chart, then the fiat inflow would be would have been quite high during the last 2 years, right? Into these
Was
systems.
huge.
And we've seen
Yeah,
that because the price
yeah,
surged so much,
yeah.
right? And I think here again, Bitcoin and gold might be somewhat similar again, right? They have this intrinsic value and it comes from scarcity. I think it also comes from the network. Like the more people accept it and believe in it, the more valuable it becomes, right? The more people I can pay with Bitcoin or get paid with
Hmm.
Bitcoin, the more valuable the whole network becomes. But like if you want to get out of the system, you kind of have to find someone else who thinks it's the network is worth more, and therefore he's willing to buy, right? Like who
Hmm.
thinks the intrinsic value is higher. So I think also here, especially with all this inflation that happened, you have this always have this aspect of speculation on top of the intrinsic value. But to me, I don't think this is a Ponzi scheme because it really has value,
Mm.
right? It has value. You can use this to transact. It has digital scarcity, and that is
Yeah,
something that for me totally speaks against it being a Ponzi or a pyramid scheme because it has value, right? It's not
yeah,
that it doesn't. It produces no returns. That's true, but gold doesn't produce any returns if you hold it. But it has this utility that over 1,000, 2,000 years, where you have held it, the value has stayed somewhat the same, or it could like the purchasing power of it. Maybe that's a better term for it, right?
yeah, yeah, exactly. I mean, if you were living in an environment where the government was a lot more predatory, which unfortunately it feels like many different countries are heading down that spectrum.
Yeah.
But say you're living in, I don't know, if you're living in a country closer to the North Korea spectrum, right?
Mm-hmm.
Having your money saved in Bitcoin, you don't even really care if the Bitcoin value is going up or down, right? You just know
The
that,
price.
hey, yeah, oh, sorry, the price, sorry, the price. The price is going up and down because the value it gives you is, hey, I can save my surplus in something that is, at the moment anyway, still safe from government predation, right?
Yeah.
If you lived in Zimbabwe and you knew, hey, for the last 20 years, 30 years, your monthly salary or whatever you save per month was always worth zero. within 90 days.
Yeah.
You'd save in Bitcoin or US dollars or whatever, just because you don't care about the price going up and down. You just care that, hey, it's going to be probably going to be worth something in 3 months, but my Zimbabwean dollars are not.
Yeah. Because it has this intrinsic value for that person, right?
Yeah,
It's like,
exactly. And I
yeah,
think that's that intrinsic value that Bitcoin and gold has.
yeah,
And therefore, it's not, yeah, I wouldn't call it a Ponzi because it does serve a purpose.
yes, yeah, yeah. And yeah, totally agree. Yeah. And I'll go look even further and say like Ethereum is also not a Ponzi. I haven't,
What?
unfortunately, I haven't done like a Ponzi in here, like a real Ponzi. I'll have to think about one. I don't, I'm sure there's lots in the crypto sphere, but that's more like fraudulent things, right? But like, if you take away the speculation out of it and you're back to this like intrinsic value, then I think it's going to be hard to find like a pure Ponzi, because that's like something that's just fraudulent, right? So, but
Maybe
yeah,
you can
again, yeah,
look at AMC or something.
yeah.
Like AMC or GameStop, maybe that's a Ponzi. I don't know.
But I mean,
Because many,
yeah, I think like that, it also has value. I mean, like GameStop, they still, I guess, they still have a lot of physical shops where you can buy and rent games, and that has value, some intrinsic value at least, right? It might not be very high because just technology is overtaking it, but and then
yeah.
there's a whole lot of speculation on top of it. But to me, like Ponzi is really this like fraudulent thing, right? They're pretending they have something that they don't, and I don't think they're doing that. Even with AMC, like I think that's like the cinemas, right?
Yeah.
I think they have. I mean, yeah, it's still real estate that they
Okay.
have if they maybe they own it or they rent it or something.
So Ponzi's, I guess from your definition, would also have to have that aspect of dishonesty, of saying that you are something that you're not.
Yeah, and maybe a pyramid scheme is not that much of a fraudulent scheme, but even if we'd say it's a pyramid scheme, that for me would be something where you need more money to flow in to investors to get their money out. And yes, I think like if you get too far on this like speculation side, yeah, you definitely need that, right? Because it's traded so high above intrinsic value. And that's a whole nother different argument that you have to have, even for Bitcoin and gold. Like what's the intrinsic value of this network, right? And everybody has a different perspective on that.
Yeah.
So you might think the intrinsic value of Bitcoin is like worth much less than it's currently traded at, so you're not going to buy any more. I might think that it's much higher, and I'll be buying more. And so you have like these totally different opinions upon the price, and then on top of that comes like this whole speculation, right? And that's like a more psychological thing, I think. Like people think the price will go up because others think the price will go up, or because of inflation or whatnot, and therefore they just try to make money with that, off of that, right? So yeah, I don't know. I still struggle to define it really. Like the whole, yeah, what the Ponzi
But I think
is
that's
or what the
something
pyramid is and how that applies to all that.
that you give a lot of insight to, right, with your walkthroughs, because you really take the time when you look at a protocol to really understand how the tokens are created, what are the rules governing how they're distributed, etc. Right?
Yeah.
So I think with your with let's say expertise and insight, you're able to help navigate through these murky waters to understand, hey, this thing might look good on the surface, but what's under the hood, right?
Yeah. Yeah. Like how to find out what the real like intrinsic value of this thing is, right? What's the utility of it? And how can someone like make up their own mind about if this is a good price to buy it for, and to hold it. And then hopefully the intrinsic value increases because they're producing something.
Yeah.
And then they can sell it later on, right?
Yeah. Because
Yeah.
obviously everything starts from zero, right? Like you can't have a startup
Yeah.
that has value. The startup might be, on day one of a startup, the startup might have a business plan, might have a team of experienced, energetic people, intelligent people, and maybe, yeah, that's part of that intrinsic value. But people then look at it and go, hey, forward looking, I think these
Yeah.
guys are going to take over the world, right? So I'm
Yeah.
willing to put money in there
Yeah.
because I just believe they're going to create so much value, and so my investment will pay off.
Oh yeah. Yeah.
Um, and in that case, you would say, hey, that's not a Ponzi, but it is someone putting in a lot of money into something that at that point is still not worth much, right?
Yeah. 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 And if you purely think of this like Doomberg circles thing, right? Then yeah, in like a lot of cases, you will need more fiat to flow in to be able to get this exit, right? To have your fiat come out again. It really depends
Mm-hmm.
on the timing, obviously, of that. But I think that's something that's just inherent to the whole system. I mean, that's the same for Amazon or for any other startup you might invest into, right? That's not
Right.
specific for crypto or tokens or Ethereum. So yeah, um, that's kind of how I see it, right? And then for the tokenomics DAO, I think like for us to have some sort of intrinsic value and for people to want to buy, hold a token that we might create in the future, we need to define for us what that intrinsic value is, what we want to create, right? And how we think this will increase over time. And I said this in the last episode, and I've also write about it in the article that we talked about in the last episode. Really like what we want to produce, right? It's this the content, the brand, the community, and that in itself has value to me, right? Bringing together
Mm-hmm.
the community is almost like 500 people. Bringing together these 500 people, there's got to be some value in that, right?
Yeah.
Hard to put a quantify, but there's got to be something in it. And then I kind of looked at it from this perspective of like what else might be out there, like Reddit. I really like Reddit. It's a great community. There's lots of people out there that discuss interesting topics, and you'll almost always find an answer to a question that you have, or already find somebody who's answered it. And so how do you value that, right? And then I think what Reddit did is they grew this whole thing, the community. They made it possible. They made it possible that people could do it, and then they slapped this like ad model on top, right? They said like, okay, now we're gonna sell the data that we have accumulated here to advertisers, and then that's the way we're going to make money with that, right? And so all of a sudden this community that before that didn't produce any real revenues, with adding this ad model on top, they all of a sudden did, right?
Yeah.
And people who knew that was going to happen, or could anticipate that this was going to happen, they might have gotten a good deal on that. Maybe they're 10x, I don't know. Yeah. So I think really the core essence of it, of understanding if something is a Ponzi or a pyramid scheme, is what value does it really create, what value does it really have, and what value it's really going to have in the future. And this is like, to me, it's no different than like value investing in a sense, right? So maybe tokenomics, or evaluating tokenomics, has a lot to do with that. But then of course it also, like, speculation is also like a totally legit way to make money. A lot of people do it, so why not? More of the psychology thing. But yeah.
A lot
Well,
of
yeah,
big topics coalescing, huh? A lot of big topics that span a lot of different spheres, it's
yeah,
technology, it's psychology, it's culture,
yeah, yeah,
money.
yeah.
Yeah.
And like it tells me that like this whole token and DAO and crypto thing is like it is something new. It's new technology, but a lot of the things behind it are just the same as what we are really used to, right? This whole market psychology, intrinsic value, speculation, um, and there's at the end it's just humans interacting with it, right? So it's all kind of while new, very familiar.
Yeah. I mean, I think a lot of it's also a branding issue, like when Bitcoin was coming to the fore and everyone was looking at, these guys that were early investors, early Bitcoiners driving around in loud Lamborghinis, right? And you have the online they're not the friendliest bunch of people, right? Sometimes it's like, oh, have fun staying poor.
Yeah.
Bitcoin fixes the world, right? Um,
Yeah.
and then you've got the whole legacy media slash financial system throwing everything, including the kitchen sink, at cryptos, right? Saying that it's used only for money laundering and you have to be a gangster if you want to buy it.
Yeah.
It's if you own Bitcoin, you're basically as good as a drug dealer, right? So
Climate change.
I yeah, yeah, climate change. So I think there's a branding issue there as well. Like if we were to just say talk about tokenomics, but say tokenomics was something that was under the Apple umbrella or the Google umbrella, I think the reaction people might get to things like that would be also different, right?
Yeah. 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 They probably like spend a lot of money on marketing. I think Apple certainly does, and branding.
Yeah.
Yeah.
And I guess people think of these massive companies with some form of legitimacy, right? That
Yeah.
and accreditation, right? Credentialists. um, but yeah, because tokenomics and crypto, it's a lot of people that were drawn to them at the beginning were probably not the highest in our social hierarchies, right? They didn't come from the elite class. And so you have this shift, right, where the underdogs are coming to the forefront and they don't have the polished, not yet anyway, they don't know, how the different systems that our societies have, how they integrate with each other, run with each other, run parallel with each other, right?
Yeah.
So
Yeah.
in a way, it's like this bull in a china shop just charging forward at all costs.
Yeah.
And I guess optics wise, it's still, if you go speak to the average grandpa, grandma, you ask them about Bitcoin, I don't think the first impression that they get, that first comes to mind is a positive one.
It doesn't need to be grandma. It can be just people my age. There's plenty that,
Yeah,
yeah,
exactly.
that are like to some degree brainwashed by and haven't really looked into it, right? they just they just hear this and they see like it's bad for the climate. And then I
Yeah,
just recently had this tweet where this guy said like, the EU is just about this week to ban mining of Bitcoin, right, in the EU. And then this guy had this tweet, I forgot who it was, but he said like if they ban Bitcoin, they should also ban tumble dryers because they use more energy than Bitcoin does, right?
yeah, yeah, yeah,
So
yeah,
yeah,
exactly. It's like this cherry picking of what's bad
yeah,
and what's not, right?
yeah, 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 yeah. Luckily, they didn't ban it,
Yeah,
so I think that's what I heard
yeah,
today.
I think it fell through.
Yeah,
And another thing to think about is basically anyone that's coming into this space, right? In a way, they're taking a risk, you know. They're going against centralization, which is always risky, because there's always safety in numbers. Your upside might be
yeah,
capped, but your downside limited, right?
yeah,
Stay with the herd. So there's also that aspect to think about because at the moment it's still a minority thing. You
Yeah.
know, no one bats an eyelid when you say, "Hey, I'm gonna YOLO Tesla," right? They might
Yeah.
go like, "Whoa, you're pretty brave," right? But you
Yeah.
tell someone, "Hey, I'm gonna YOLO Luna," they'll be, "Well, what's that?"
Yeah. Yeah. Exactly. Yeah. What's that? That's a Ponzi. And then it's easy to like go and call it a Ponzi without having looked into it really.
Hmm.
Maybe Luna is a Ponzi. I don't know. Yeah, you can make
You're
up
gonna tell us one
your own
day,
mind on that.
bro.
Yeah, we'll do a. Yeah, we're planning to do a session on that maybe next week. Talk about Luna. But yeah, um, do you want to wrap it up?
Yeah, so before we wrap it up, what? So let's say we summarize it, we'll say that a lot of these, let's say, heuristics we can use to ascertain, right, how Ponzi-ish something is, right?
Ponziness.
The amount of
Yeah,
Ponziness
assess the
that something
Ponziness.
has.
Yeah,
Yeah. So does it create underlying value in of itself? Like, is there a system there that's actually doing something for society or for people or for individuals, right? What
yeah,
would somebody's thoughts be if they had to hold something forever? You could
yeah.
pass it on maybe the next generation, but what if you could not sell it? Would that still be something you want to hold?
Yeah.
Like, I
I'm
don't
just
think
writing
these
this down
things are
as we go. Yeah,
definitive. Yeah, I don't think these things are definitive, but I just think it, you know, your gut feel answers to these things
yeah,
might help to inform your decision, right? And I
yeah,
think
yeah,
if you're always in something just to speculate, yeah, you might be treading the waters of maybe I'm stepping into a pyramid scheme, you know.
yeah, yeah,
If there's no fraud going on, then I guess you won't call it a Ponzi, but you might say, hey, I'm now in a pyramid scheme where I'm depending on selling this thing to the greater fool down the road that will pay
yeah,
more than what I paid, right?
yeah, yeah, yeah. Exactly. Yeah, yeah. I see if I can do like
And I'm
this
just doing this.
pyramid test. Um,
Hmm.
that one can go through, right? It's certainly like this. Does new money need to come into the system to keep it alive? And like you said, like who are you going to sell to when you want to exit, right? Are there going to be enough
Yeah,
people that believe in the system or believe the intrinsic value is growing? Does it have an intrinsic value? Um, does that grow over time? Like, how does that
yeah,
all work, right?
yeah.
So yeah, that's I think pretty interesting to look into.
Hmm. Yeah, so I guess we've covered most of what we wanted to talk about, right?
Yeah, I think so. Yeah, yeah. I think like a whole another topic that I'd like to look into, and maybe we can do this with Luna, is like belief systems, right? So um, it doesn't have to be, or I don't think it has a lot to do with Ponzi or pyramid schemes, but a belief system could kind of fall apart if people start believing in it, right? And fiat might be that, or gold might be that, or Bitcoin might be that, or Luna
Hmm.
and
Yeah,
UST, right? If people think like, oh, I don't think it's gonna work, and then they start selling it, then you run into these pyramid issues, right? Like you don't have enough
yeah,
excess liquidity, I think, um,
yeah,
to get everybody out at the same time.
yeah,
Yeah. So then you have to find people that have belief in it again and will hold on or even buy. So maybe that whole thing, like the belief system, somehow, yeah, comes into this or adds to this whole
yeah.
Ponzi
Hey,
topic.
you just reminded me of something because I was in Australia recently, right? And I was hanging out with my cousin and his family, and they're super fun people to hang out with. And we were driving by, and we saw, I think, somebody carrying like a Burberry, like a big Burberry shopping bag or something like that. And my cousin goes, "Hey, did you hear about what happened with Burberry?" And I'm like, "No." And he said, "Yeah, there's this guy. I haven't gone and looked into it, so he might be bluff. You know, I might get. I don't know. He might have told me a big bluff. I don't know. But he said
Yeah.
there was a guy in the UK that won the lottery, right? And he's just been going to the Burberry store, right, with all his mates and just like getting super dressed up in Burberry stuff, walking the streets, getting drunk and getting hungover and doing stupid stuff while being decked out in Burberry attire, right? And he said like that guy apparently has single-handedly like destroyed Burberry's image, right? So I just thought about that because you were talking about belief systems, right? And
Yeah.
everybody believes that, hey, only the super classy, elegant, rich, elite people can afford to get dressed up in Burberry's and in Burberry clothes or carry Burberry
Yeah.
bags, whatever.
Yeah.
And then so you go, yeah, I believe I'm part of that class now, so I'm gonna take this, pay out so much for to carry this bag, and it'll be a symbol that I've made it, right?
Yeah.
And then you see some guy getting drunk in a pub, right? Spilling his cider all over his Burberry jacket.
Yeah.
Yeah,
Disrespecting the brand and the
yeah, it
values it
messes with that
stands for.
belief system.
Yeah,
Exactly, exactly.
it does.
I
Yeah.
just thought
Yeah. Yeah.
that's pretty. Or imagine what happens if, say, Elon Musk, or I don't know what happened with the church, right? And the crimes that were being committed by the church and then getting covered, people getting their crimes covered up.
Yeah.
That hurt the church so badly, right? Because the
Yeah.
belief that people had in the institution got took a hit, right?
Yeah. 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 I think
Maybe
that's,
there's
and that's
also
something that
this,
really goes into markets as well. I think a lot of that
yeah.
has to do with it.
Oh man, this is
Stuff falls out
so
of favor.
interesting. Because
Yeah. Let's,
maybe you can do this chart with the flow of fiat in and out, but maybe there's also this thing, flow of trust.
flow of trust and belief. Yeah.
Yeah,
You have this like
because when
belief barometer or spectrum or,
yeah,
yeah. Yeah.
yeah,
That's interesting. Yeah.
like what happens if somebody finds out that Elon Musk has a whole garage full of V8 supercars and he just is actually a petrol head? I mean, I don't think he is, but I'm just saying, right? These
Yeah.
things, these people are icons and they're so important to the brand, right? And they're leaders in belief systems.
Yeah.
And
Yeah.
when they're shown to not be consistent with what they're telling people, then belief takes a huge hit.
Yeah. It does. Yeah. Or like in technology, if something, you believe in something and then there's a bug that it's found, or the system doesn't work as good as advertised, or that as you thought it would, then yeah, that can make your belief crumble too in
Hmm.
it, right? Yeah.
Or what happens if a whistleblower comes out and says, "Hey, did you guys know that every
Yeah.
single Apple iPhone gets made with a certain chip, and this chip actually records everything, every
Yeah.
single thing. Your
Yeah.
camera's on all day, right?" Like, again, not
Yeah.
saying that that's true, but just imagine what that would do to the value of Apple's brand, right?
Yeah. Yeah. Oh yes, certainly. Yeah. People would definitely lose their belief in it. I
Mm.
need to see how I can fit in the belief into a diagram, put this into this like whole model, because I think it belongs in there, right?
A
um
belief pyramid.
the belief pyramid, the belief scheme. I don't know. I'll have to think
Yeah.
about it. I'll need some time, but I think belief is an interesting aspect that goes probably into market psychology and things like that, which I don't know all too much about, but certainly interesting to explore. And I think to some degree, um, yeah, it overlaps with what people say or think a Ponzi scheme is, right? Because if belief
Hmm.
collapses, then all of a sudden you have, if you go back to the diagram, you'd have like a massive request for fiat outflow out of crypto, right? And
Hmm.
it wouldn't be able to match that. um yeah, because it's going to be hard
You wouldn't
with
have
that lost
liquidity to
belief.
do that. Yeah.
Yeah,
Yeah.
liquidity and like find people exactly who have the belief otherwise to think that the intrinsic value is actually, or that the system is actually good, still good, even though a lot of people have lost their belief. So somehow it flows into that. I think. I hope that was valuable for everyone. I certainly,
Um,
yeah, I
I
think it was
enjoyed
a
it. So
good
thanks a lot,
conversation. Yeah.
Flo. Yeah.
Likewise. Cool.
So see you next time.
See you next time.